We've just been talking about Facebook and Google, Alphabet, things like that. Those are obviously huge successes. What's the next Facebook? Give me a tip.
Well, you're right. Those are trillion-dollar or approaching trillion-dollar companies. And so we don't own, actually, in our flagship fund, any of the FANG except for Netflix, because we are all about finding the next big thing. So the next big things involve our 5 disruptive innovation platforms. So DNA sequencing, robotics with collaborative robots, energy storage, electric vehicles, think Tesla, artificial intelligence. You can also think Tesla on that, but you can think about every company when it comes to AI. And then finally, blockchain technology. So genomics, we think, is the most underestimated and misunderstood of our disruptive innovation platforms. And the reason is we have never been able to really cure disease. Now that we're able to isolate mutations through DNA sequencing, think Illumina, that's the foundational stock in this space, we are able to understand where the programming errors in our genome are. And with CRISPR gene editing, increasingly we're beginning to believe we're going to be able to correct those programming errors. I'm going to give you a comparison today versus the tech and telecom bubble. If I had told you in the tech and telecom era that there would be 3 foundational stocks in the CRISPR-Cas9 gene editing space, they own the patents. I would have told, and that they'd get a 10% royalty probably on any therapy derived from CRISPR-Cas9. They, given that we're talking about curing disease here, curing pediatric blindness, curing sickle cell anemia, beta thalassemia, leukemia, they probably would have accumulated to $200 to $300 billion in market cap. Today, the 3 stocks, Editas, Intellia, and CRISPR Therapeutics, can barely manage to get to $5 billion cumulatively. Actually, we think that 2 things are happening here. Post the tech and telecom bust and the 08-09 meltdown, there was an accelerated shift into benchmark investing, passive investing, benchmark sensitive investing to lower risk, the risk that the portfolio managers and analysts were taking. In the world we believe is evolving, one of the most dangerous places to be in terms of the kinds of returns possible out there is in the indexes, because they are being populated increasingly, we believe, by value traps. They're cheap for a reason. I mean, if you look at whether it's banks, energy, auto companies are in massive trouble, pharmaceuticals, if they don't change the way they're doing things. Even rails, we think autonomous truck platoons are going to take the place of rails or be cheaper to transport freight. So anyone hewing to the benchmarks, which are very backwards looking, they're not about the future. They are about what has worked. We're all about what is going to work.
Car companies are in trouble. There's one car company, at least this week, is not in trouble. That's Tesla, that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast. And the numbers have gone up dramatically, and yet, we think it's incredibly undervalued. And the reason for that, there are 2 assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose 1/3 of its market share. It had in 2018 17% global market share, including China. That it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So you think, is that what you're saying?
And if we are right, this stock has only begun. There are three other advantages Tesla has. So batteries, one. Second is they have their own artificial intelligence chip. And our analyst, James Wang, who who worked at NVIDIA, the artificial intelligence company, for 8 years, looked at the specs of this chip and said, oh my gosh, they're 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. And that's important because we're going autonomous with electric. And autonomous is an artificial intelligence project, right? The winner will have the most data and the highest quality data. Tesla has 14 billion miles of real-world driving data today, and the closest competitor, Waymo, has 20 million. So and then the last is Tesla is the only auto manufacturer still that delivers over-the-air software updates to modify performance.